The Reserve Bank provides its biggest hint yet that more rate rises are on the way. Building industry failures hit a 7-year high, and China develops an electromagnetic gun to break up protests. It's Wednesday, the 19th of April, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. A special shout out this morning. I'm in Orange visiting my mother, and she said, tomorrow morning, darling, you have to have a shout out for Orange. So here it is, a shout out to Orange.
Oh, well said. It's a lovely part of the world, isn't it?
Well, you were up in Orange in the last couple of days as well, in fact.
I was. It was. We basically took Fear and Greed on the road.
That's exactly right. It's a fantastic part of the world, Orange.
Yeah, it certainly is. Now, Sean, after the show, you have an interview coming up with Anthony McClure, who is the managing director of Silver Mines Limited. And number one, I love the name Silver Mines for a company that runs, you guessed it, silver mines, because it just tells you exactly what they do.
Exactly right. Now, Silver Mines has just got approval for a big new mine in the central west of New South Wales, near the town of Mudgee. We talked to him about that, what the plans are, but also how they handled community disquiet about the project, and also the fact that, a large part of the community were very much in support of the project. So it's just a bit of a different chat for us, talking to a CEO about how they go through the approvals process and manage community expectations and that type of thing. Really fascinating chat with Anthony.
Yeah, it is. It's a good one. It's coming up a little bit later on. The main story this morning, though, Sean, the Reserve Bank has made it clear that there remains a strong case for another interest rate hike, with the central bank worried about population growth and about public sector wage increases.
Minutes of the Reserve Bank board meeting of 2 weeks ago, where the central bank did not lift the official cash rate, show that it was a very, very close call. The board still thinks that further rate rises might be needed to tame inflation. The minutes said the decision to keep rates on hold was to provide more time to gather more information, citing jobs, inflation and spending data as critical to the outlook. But the bottom line is that inflation is still too high and the labour market is still too tight.
And, of course, the influx of migrants isn't going to help, at least in the short term.
That's right, and the Reserve Bank said that yesterday. Treasury has forecast that 650,000 migrants will enter Australia either this financial year or next financial year. That is a lot of people looking for housing, which will push up prices in that part of the economy. The Reserve Bank mentioned that. In fact, the Reserve Bank had a bit to say on housing yesterday. It said the property market downturn might be smaller and more short-lived than expected, in part because of all these migrants coming to the country.
As you said before, Sean, the focus is very much still on inflation being too high. Does the Reserve Bank kind of give any indication as to when they think inflation will be back under control?
Not really, but it was pretty interesting because yesterday's minutes note that the central bank's forecast for inflation falling back into the 2 to 3% target range by the middle of 2025 is predicated on further rate rises. Now, they're saying that notwithstanding they didn't lift interest rates last time round. So you can take from that the earliest is the middle of 2025. Under that scenario, we'll be talking about inflation for a while yet, Michael. The bank pointed out that its mandate is to get rates lower, so it's determined to do so. 2 weeks ago, the board agreed it would be beneficial to get more data, but it's pretty clear the Reserve Bank doesn't think the rate hiking cycle is over just yet.
So how did local markets respond to all this?
Well, yesterday, the S&P ASX 200 finished down 0.3% to 7,360 points, while the materials and utilities sub-indices ended higher. All other 9 sectors ended lower, led by energy stocks. Among the large caps, the banks and miners were mixed. The retailers were lower, so too Telstra. Woolworths was among the worst. It dropped 2% yesterday. Coles was off more than 1%. Regis Resources share price was up 0.5%, notwithstanding the gold miner downgraded its full-year production guidance. Been a bit of that going around. Evolution Mining, St Barbara, there are other gold miners that have downgraded recently. Pretty good day, though, for lithium stocks, with Core Lithium, Pilbara Minerals and Allkem all among the best performers of the top 200. And Michael, farewell to Oz Minerals, which traded for the last time on the ASX yesterday. The Adelaide-based copper miner, of course, is now part of BHP.
Oh, is there any kind of ceremony? It feels like it needs to be marked with something, don't you think?
Yes, Oz Minerals has been a big player on the ASX for a long, long time. And with all those assets in South Australia around the Cooper Basin there, very sad day, I think.
Yeah, they should. You know what they should do? Like release doves with little rocks tied to them to signify kind of the departure of Oz Minerals from the ASX.
And watch the doves fly for about 100 meters, and then suddenly the weight.
Suddenly you just see these doves just dragging their legs behind them, just trying to kind of get away. That's actually a terrible image, and I suspect something that the RSPCA would have an issue with. So maybe this is why people don't kind of mark the departure of a company from the ASX with any kind of ceremony, Sean.
I'm just going to go on to international markets, I think, Michael. I don't want to go there, really.
Yeah.
Oil prices were higher yesterday. Gold slipped back below $2,000 an ounce, $2,000 an ounce, of course. Lithium prices continue to slide. Now, I said the lithium stocks did well yesterday, which is true, but lithium prices have really come back a long way. Now, China is the major lithium producer, so the commodity is often quoted in yuan, which is the Chinese currency. The lithium carbonate price at 99.5% battery grade, so that's the measure, is currently around 187,000 yuan. A month ago, it was 300,000 yuan. That very much explains why lithium stocks haven't done so well. Finally, Aussie dollar doing pretty well at the moment, Michael, trading around 67.3 US cents.
All right, we'll be back in a moment with the rest of the day's business news. Sean, building industry failures for the first 9 months of this financial year have hit their highest level in 7 years, and they're on track to break a decade-long record.
Construction industry insolvencies over the 3 quarters to March were 1,601, according to the corporate regulator, the Australian Securities and Investments Commission. Now, almost 1/3 of those occurred in the first 3 months of this calendar year. While insolvencies across the country are rising, which really isn't surprising given how much higher interest rates are, the building sector is being particularly hard hit and makes up nearly 2,000 of the total 7,400 insolvency appointments so far this financial year. That's ahead of last year, where construction accounted for about 25% of the total.
Opposition leader Peter Dutton has reshuffled his shadow cabinet, promoting 2 female Indigenous senators who support a no vote on the Voice referendum.
Yes, he's more or less doubled down in his opposition to the Voice. Quite incredible, really. The reshuffle came after former Shadow Attorney General Julian Leeser stepped down in light of the Liberal Party's decision to oppose the Voice referendum. The actual reshuffle was more substantial than first expected because frontbencher Karen Andrews yesterday said she would move to the backbench. She won't recontest her seat in the next election in Queensland. In fact, she was going to step down totally, but apparently Peter Dutton convinced her just to go back to the backbench. Michaelia Cash, who looks after industrial relations, will take on the AG, the Attorney General duties. Senator James Patterson will take on Home Affairs. And South Australian Senator Kerry-Ann Little, the only Indigenous federal Liberal MP, will join the outer shadow ministry with responsibility for child protection and prevention of family violence. Also, Nationals Senator and prominent No campaigner Jacinta Price, who is Indigenous, has replaced Julian Leeser as opposition spokesperson for Indigenous Australians. Put all that together, and Peter Dutton is making it very clear the Liberals are very much against the Voice referendum.
Sean, fraud tip-off relating to the NDIS have nearly doubled compared to this time last year.
Yes, the National Disability Insurance Scheme Minister Bill Shorten was at the press club yesterday. He said there were 1,700 tip-offs in March, 1,600 in February. He added that the system has been mismanaged for nearly a decade. 1 in 5 Australians report having a disability, and the scheme delivers $2.25 return to the economy for every dollar invested, Shorten said. He called on states to contribute more to the NDIS. Now, that came just hours after Victorian Premier Daniel Andrews pushed back against any such idea. The NDIS has well and truly exceeded its original forecast maximum annual price tag of about $25 billion. It'll actually cost the budget $35 billion this financial year. That's a long way in front of that $25 billion. Unchecked, it's expected to reach almost $90 billion a year by 2032. Shorten yesterday said the NDIS has lost its way, but it is here to stay.
Speaking of the budget, Sean, the federal government has a $50 billion hole to plug in the upcoming budget, and Treasurer Jim Chalmers is talking about overhauling the capital gains tax system.
Yes, he just keeps floating these ideas, and some of them are very good, but very difficult politically to implement. There are about $250 billion of annual tax concessions in the federal budget. Now, there's $50 billion in superannuation concessions. There's almost as much, about $48 billion in capital gains tax exemptions around main residences. There's GST exemptions, property investor exemptions, and other capital gains tax exemptions for individuals and trusts. Exemptions all over the place, Michael. Chalmers wants a public conversation, as he puts it, about the sustainability of current fiscal settings so as to help reduce the deficit. The government has already outlined plans to decrease the tax concession on superannuation balances over $3 million, but that's very much at the edges. Obviously, the Treasurer wants to do much more in the May budget. It is political dynamite, and that's pretty much stopped major changes previously. There is plenty of political capital with the Labor Party at the moment. It'll just be interesting to see how far the Treasurer can push it.
So it's all quite strategic, isn't it, Sean, in terms of floating these ideas, kind of gauging the initial response and just deciding which ones are worth kind of pursuing and spending a bit of political capital on?
Absolutely. There's no doubt that the capital gains tax exemptions are very, very generous. And if we want to pull back some of the massive budget deficit that we're facing in the many years ahead, the best way to do it is to increase the GST. No one's going to do that. Okay, so let's change some of these capital gains tax exemptions. Very hard, though, for a politician to do it. That's the problem.
So would you say that he's running it up the political flagpole?
It's a funny phrase, isn't it? Running it up the flagpole.
Yeah. I mean, where does it even come from? Because the idea of it is that you run it up the flagpole just to see what people think. You don't do that with a flag. You don't run a flag up the flagpole just to see whether people like it or not. You put it up there because you're proud of it, and you're going to kind of all stand around and look at the flag. This isn't what's happening here. He's putting it up there to test it, see what people think, and then he'll take it down and tuck it away if people don't like this particular flag.
Outrageous. Who is using these sorts of words?
That's right. I mean, that was us that used it. But anyway, let's move on. The New South Wales government, Sean, has kicked off discussions with the owner of the state's largest power station, Eraring, and Premier Chris Minns and senior ministers refused to rule out buying the ageing coal-fired power plant to shore up the energy supply.
That's right. Now, the New South Wales government is a new government. It's amazing when you suddenly take power and you have to make decisions about some of these things, how things change. Just 2 weeks out from the closure of the Liddell power station, which is the state's third largest, the new Treasurer, Daniel Mookhey, revealed the government had met with Brookfield Asset Management and was canvassing options over the future of Eraring. That's according to a report in the Financial Review. Now, Eraring generates a quarter of the state's energy supply. Its current owner, Origin Energy, unveiled a plan to close the plant as early as 2025. Premier Chris Minns has been frank about a willingness to buy back the power station or potentially prolong its lifespan in a bid to bolster energy security. Yesterday, Mr. Mookhey confirmed conversation with the plan's new owners have begun. It's going to be very interesting how that ends up. I'm not sure that the electorate will be delighted about the government buying back a power station.
No, well, I think they're just running it up the flagpole at the moment, Sean.
I think you're right.
Yeah. And finally, there's been some big moves in recent months in the price of LNG, and the local gas producers are feeling the impact on their share prices.
That's right. Local gas producers have had a pretty hard time of it. They've been hit with government and price intervention late last year, new requirements around emissions reductions, potential petroleum tax changes, and the short-term price for LNG in North Asia has dived by about 2/3 since its peak in August last year. Now, that's mostly thanks to a mild northern winter. It means storage plants are relatively full for this time of year. The price of gas is still above long-term averages, and Europe's still struggling to replace Russian gas supplies. But some analysts now reckon that gas prices will fall further. Yesterday, investment bank UBS, for example, cut its earnings forecast on Australia's two big gas producers, that's Woodside and Santos. Their share prices have really struggled. Woodside's share price was down 2.4% yesterday. It's off 5% this year. Now, that's in a market that's risen. Santos finished 2% lower yesterday and is pretty much flat this year.
All right, to international news now, Sean, and China's economy expanded by 4.5% during the first quarter after COVID-19 restrictions were lifted.
And that's good news for Australia. There was a rebound in factory and consumer activity during the 3 months to the end of March, according to the figures released yesterday, which I suppose isn't unexpected given the economy emerged from lockdowns. The bigger question is whether the momentum can last. Economic data released over the past month or so has been mixed, though the numbers yesterday definitely are strong. Unlike other major economies, China isn't experiencing higher inflation or interest rates, so it's got that working for it as well.
This is an interesting one, Sean. Apple and Goldman Sachs have launched a high interest rate savings account in the US, offering to pay more than 10 times the national average rate.
Yes, when I first saw this, I was wondering whether they were talking about Apple, the tech giant. And we are talking about Apple, the tech giant. So Apple and Goldman's will offer a 4.15% a year savings rate. Now, the average rate in the US is about 0.4%. The new savings account is being offered to users of Apple's credit card product, which is also a partnership with Goldman. Apple is offering savers no fees, no minimum deposit requirements, according to a report in the FT. Apple already offers financial service products, like it has a buy now, pay later program. This pushes it deeper into financial services. Commentators are suggesting it's actually heading towards becoming a bank. Apple's not saying that, but it is fascinating just to see how much it's integrating itself into financial systems.
Okay, last one, Sean. This is probably a little bit worrying, really. China has demonstrated an electromagnetic gun that fires projectiles shaped like coins. It's a weapon that state media says could be used to break up violent public disturbances.
I think what's really worrying about this, apart from the fact it's an electromagnetic gun, is it comes after these widespread protests late last year. Remember, people very much became fed up with the harsh rules around COVID, the snap lockdowns, that type of thing. Now, the demonstrations were largely peaceful, but now the Chinese authorities have come up with this gun. It's been featured in a military technology show broadcast by state-run China Central Television, according to Bloomberg. It's manufactured by China North Industries Group. The weapon is intended to reduce the chances that people are killed when riots are quelled, much like when authorities use guns firing rubber bullets. I'm not sure that makes me feel any better.
No, it actually doesn't.
Now, similar weapons have been made in other countries before. Electromagnetic weapons allow the user to set the intensity and frequency that the gun fires. So the idea is that actually reduces the danger they pose to people. Still, the devices have the potential to cause serious injury. And there were videos on Chinese state media which showed these coin projectiles shredding thin plywood. I wouldn't like to be hit by one.
I don't know. That feels very, when it can still kind of shred thin plywood. I mean, yeah. Plywood's a lot tougher than skin, right? I'm no carpenter, but I would have thought that would do some damage.
Yeah, I totally agree. The story out of China is sort of presented in a reassuring way. Isn't reassuring to me.
No. You know what, Sean? I was really looking to you for an uplifting story to finish on today.
It's been a bit of a hard day, hasn't it?
It really has. And you did not finish on an uplifting note at all. In fact, I feel like the most uplifting part of this show today was
running up the flagpole.
No, I actually think it was the doves. I think which doesn't say much for us, is it? That the happiest part of this entire show was the image of a flock of doves with rocks tied to their legs.
Yeah, doesn't say much for the show at all.
No. Okay. Sean, up next is the Fear and Greed Daily interview. Your guest today is Anthony McClure, the Managing Director of Silver Mines.
Yep, all about their new mine in central west of New South Wales near Mudgee, just the process involved in getting it up and running and what Anthony thinks will happen. He's very, very confident that the mine will run for decades and decades, provide plenty of jobs, etc. But we also talk about the community, not outrage, but community disagreement with the mine. Fascinating chat.
Yeah, it's a good one. It's coming up next on the Fear and Greed playlist or wherever you listen to podcasts. Sean, you know what today is?
Wednesday, of course.
It's Wednesday, which means that there is another episode of How Do They Afford That out today.
What's it about?
Well, today's episode is actually it's about groceries, because obviously it's very expensive. It's been getting increasingly expensive over recent months, and it seems like every time you go to the shops, it is costing more, and you seem to be getting less for it. And so, Canna, Campbell, and I take a look at some of the things that you can do to try and kind of bring that the household grocery bill back under control. And it is not just my go-to tip of check the barbecue chickens close to closing time and see if you can get them reduced from $11 down to about $4.
Oh. There's more to it than that.
There is more substance to it than that today, Sean.
Excellent.
Of course, I do mention that because it is my go-to tip. Anyway, that one is also available wherever you listen to podcasts. How Do They Afford That is the name of that show, and we'll also put a note in today's show notes. Thank you very much, Sean.
Thank you, Michael.
It's Wednesday, the 19th of April, 2023. Make sure you're following the podcast and join us online on LinkedIn, on Instagram, Twitter, and Facebook. And stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode. And you can grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.